Hello guys, it's Stock Trader Max and welcome back to another video where today we're going to be analysing my largest position in my concentrated portfolio, which is PayPal. PayPal represents a very large portion of my portfolio. I own around $657,000 worth of the stock, which is 10,050 shares, with the average buying price at around $65.50 a share. So at this moment in time, I'm down a few percentage points as my buying, as I just mentioned, was at $65.50. So to where we're currently trading right now, I'm down around 5.8%. But not to worry, I still believe that PayPal is a fantastic company. I think it's one of the best opportunities in the stock market at present. It's likely to be probably one of the most undervalued names. They're generating an incredible amount of free cash flow and revenue and profits, of course, and they're trading at pretty much all-time low valuations, and that's comparing the valuations to its own historical performance. So let's just break down PayPal today from more of a technical perspective. I've drawn this chart for you guys. We've been trading within this rising wedge pattern. Now, a rising wedge, typically speaking, is quite bullish. And we've been in this pattern for approximately a year. I think it's actually bang on a year. This is when we kind of entered back in June 2023. And of course, we're now on the 14th of June 2024. So a whole year we've been going pretty much between $68 a share all the way down to 50, bouncing around. And, you know, the past couple of weeks, we've bounced around significantly, especially around the $68 level. And we've had 4 rejected breakouts. First being on the 23rd of January 2024, and then of course on the 26th of March, followed by the 2nd of May. That's when they reported earnings, and then just last week, actually, in fact, the 6th of June, we were rejected for the 4th time. But of course, we've also had a series of higher lows, which is very bullish for a stock. And this has represented a uptrend that we've been trading in since those lows that occurred back on the 30th of October, down at $50 a share, which in my own humble opinion, I believe is the floor for PayPal. Now, this past week, what has happened? Well, Apple had their conference, as we all know. They announced this new tap-to-pay system. We had some news from MasterCard as well, and this has put some severe pressure on PayPal. In fact, for the week, we are now down 8.56%, which in my opinion does offer, yet again, another great buying opportunity here. If you're bullish on the name and you've been dollar cost averaging in, then this is a golden opportunity to add to your position. Now, this wedge pattern does in fact expire pretty much by the 30th of August. It's very rare that you kind of go right until the very end. So I'm going to call it here around the 30th of August. And that means that we're around 76 days away now from having an outcome, whether that be a breakout towards the downside or a breakout towards the upside. And in my own humble opinion, I do believe it's going to be a breakout towards the upside. Reason being is because, we've had 4 attempts at $68. We've been rejected, granted, on every occasion, but we're also still trading in this nice uptrend. So we're definitely witnessing some tiredness from the bears here, because we are seeing these series of higher lows, which is why we have been trading within this 5.5 month uptrend here for PayPal. I think what's incredibly important to recognize during a period like this week, for example, where the stock's down 8.5%, is that you need to ask yourself, are the fundamentals improving or are they getting worse? And it's obvious here that the fundamentals are actually getting a lot better. We've heard a significant amount of news from the PayPal management just over the past 2 weeks, such as they're starting to monetize Venmo. We just heard yesterday that Venmo is now being added as a checkout option for eBay. We've also heard that Fastlane's now live and doing very, very well. And then we also heard from CEO Alex Chris at the Bank of America conference last week that PayPal at this moment in time, the numbers are looking ahead of what was given in guidance back in Q1 2024. So, that's lining up really well with a potential beat on both top and bottom line as we go into earnings in the next couple of weeks. In fact, I think it's actually the end of, the 31st of July is when PayPal are next set to report earnings. So that's a very good sign. And then, of course, I think the biggest piece of news as well is that PayPal are now launching their very own ad division, which I think is going to be huge for the stock over the upcoming weeks and months ahead. So, yes, PayPal is very volatile here. This is why I like to kind of zoom out. If in doubt, zoom out. And I like to look at the weekly chart. This is a lot more calm. It takes a lot of the emotions out of it. And, this week has been a bad week, but last week was a very good week. And where do we find ourselves trading right now? Well, we find ourselves trading exactly where we were roughly 2 weeks ago. So in that time, the fundamentals have improved. Yes, there's been some noise around Apple with their new tap-to-pay feature that they're going to be adding to their brand new iPhone. But the truth of the matter is, PayPal don't actually capitalize on sending money from friends to friend. There's no charge between friends and family, and that's what the Apple product is going to be. If I go out to a restaurant, for example, with one of my friends and we want to split the bill, well, then he can send me money just by tapping our phones together. Where PayPal, obviously, they make the majority of their money through merchants, through selling online, using companies like eBay, for example. So it's great that Venmo is now back on there. So yeah, I really like PayPal here. Still, I know despite the volatility that we've seen this week, I just feel like everyone just needs to calm down a little bit. I think one thing that's going to really kickstart PayPal is rate cuts, and in my own humble opinion, we're only 2 or 3 months away from getting the first rate cut, and I feel as if the economy is starting to slow. We've seen evidence of that. We're seeing inflation fall down rapidly, so I think it's only a matter of time now until we do in fact see rate cuts, and that could potentially be the catalyst that sends PayPal higher here. So ride the volatility, be patient. As I just mentioned, guys, on this chart here, we have roughly 76 days until this has to be broken, and I'm hoping for a break towards the upside, which could potentially see a move all the way up to $76 a share. So fundamentals are improving. Yes, the technical doesn't look so great at this moment in time, but we are likely to see a bounce in the coming days and weeks ahead. But the management is doing a great job behind the scenes, and I'm still long PayPal, and I have no interest in selling any shares. In fact, if anything, I think I might actually go out and buy some more in the coming days and weeks ahead.